Welcome to Deconstruct, a podcast from The Real Deal. I'm Lilah Burke.
And I'm Hannah Kramer. And we have lots of real estate news for you this week, plus a big story about one of real estate's best known and right now most troubled families, the Chetrits.
Let's dive in.
Let's start with a little bit of deal making. One of our favorite real estate characters, Gary Barnett, picked up a pretty interesting asset last week.
What did he buy?
He bought the Friars Club, which is a famed private club at 57 East 55th Street.
Okay, Gary Barnett, 55th Street. Doesn't he have a big assemblage over there? Is that part of this?
He does. He owns 407 and 405 Park Avenue already. And the Friars Club is just across the street from this little assemblage, but it's landmarked, so we know it can't be torn down.
Okay, so why did he buy it?
Well, that's kind of what we're trying to figure out. There are basically three options. One, he's going to build something in the very small space around the Friars Club between the skyscrapers next to it. Probably not a great plan. Two, he's going to renovate the Friars Club itself, make it a little bit shinier and something new. Or option three, and this seems most likely, though it is kind of the most complicated. Right next to 405 Park Avenue, there's another building which is home to the Burke, which is a very elite, sort of secretive members-only club. Fred Astaire was supposedly a member, so was John Jacob Astor. Owning that building would really help Barnett complete this assemblage. So one line of thinking is that Barnett could get the Burke to move across the street into the Friars Club, buy that building so that he can really have the whole block ready for his project.
Okay, very clever.
Yeah.
Okay, so Gary Barnett's real estate game ongoing, but over in Hudson Yards, the real estate game has stalled out.
What's happening there?
So you probably already know that Hudson Yards was developed on top of an MTA rail yard. The city and developers literally put a platform on top of the rail yard and built the entire Hudson Yards campus on top of it. And so the last mayor, Eric Adams, struck a deal with Related to do basically the same thing, to do it again, to put another $2 billion platform on top of another part of the rail yard and build a development on top of that. But now the Mamdani administration is saying this is not really a priority for them.
Okay, so Mamdani does not want to help with Hudson Yards Phase 2. Why not?
Well, they say that they just have a lot of other stuff going on. They want to focus on affordable housing and labor, and that's probably true, but it's also worth mentioning that this Hudson Yards platform is really just not a winning issue with Mamdani's base, and there's been sort of a campaign for him to step away from it. It's a lot of luxury housing. It was a quick turnaround deal after Related's casino plan on the property fell through. And in Hudson Yards Phase 1, Related financed the platform itself. So there's just been more of a campaign for him to step away.
So Related may have to figure out how to move forward with Phase 2 on their own.
We'll see.
Let's get into the world of digital real estate for a second. We've been following data giant CoStar, whose stock has been taking an absolute beating lately.
How bad is the damage?
It peaked back in August of 2025 at about $97 a share. And when we checked just before taping this show on Thursday, it was just under $34 a share.
Okay. Ouch. So that's what, a 65 at least percent drop? And what happened here? I mean, CoStar, obviously big commercial data platform. They were doing this resi push, right?
Yeah, and that big resi push seems to be a part of the problem. Activist investor Third Point says CoStar has spent something like $3 billion on the Homes.com push. You may remember those very expensive looking ads at the Super Bowl, but that Homes.com has only made about $100 million. So compared to a $3 billion spend, not a great return.
Okay, so CoStar's plan to take on Zillow.
Yeah, it's not going so well. And this whole thing really isn't a great look for CoStar. Now, they have said that they're going to cut their spending on Homes.com by something like 35%, but that was not good enough for Third Point founder Dan Loeb, who basically called CEO Andy Florence a bunch of names and liquidated his firm's position in CoStar. So this resi push for CoStar, which again built this really successful, profitable commercial data platform, the resi angle has just not worked out for them. It feels like a pretty big flop right now.
Okay, it'll be interesting to see if they can pull it back.
Yeah. All right, let's get into our main dish for today. So for our big story this week, I wanted to talk about a story that you've been covering really closely, basically since you started here at The Real Deal, Lilah. You have been covering a series of defaults and lawsuits against the Chetrit Group. So the Chetrits are a really well-known real estate family here in New York. But for anybody who's not familiar with them, can you take us back and just tell us who we're talking about here?
Sure. So the Chetrits are very self-made. So the lore here is that Joseph Chetrit came to the United States from Morocco in the 1970s and made a lot of money in the textile industry, pivoted to real estate with his family. They first started with residential properties in Brooklyn and Queens, and then bought these office towers in the city. And they gain this reputation for being these sort of quick acting, fast actors. They would come with cash. They would go look at the building, but they wouldn't have these sort of like spreadsheets of cap rates.
Yeah, I think the Chetrits have a reputation for being kind of the consummate, scrappy deal makers in New York. I remember an anecdote from a profile that we did of Joe Chetrit a couple years ago. And the source said something like, Joe Chetrit could sell you on the fact that the sky is purple with pink polka dots. They're just supposed to be these incredible deal makers. And they built this empire from nothing.
Right. And also a part of that profile is saying when these guys came on the scene, they were sort of traders. They were like, buy low, sell high. They took these lessons from the textile industry. They didn't have like a college education. And, they sort of applied that in the scrappy way that you're talking about.
Yeah, but from the coverage that you've done, it certainly feels to me like the tide has shifted here. And I want to be specific about who we're talking about because there are a lot of Chetrits. There are at least 2 Chetrit companies. So give us the specifics of what you started tracking and who we're talking about.
Sure. Chetrits, the brothers Chetrit, as it were, they split in 2011. So you have on one side in the Chetrit Group, Joseph and Mayor Chetrit. And then in the Chetrit organization, you have Judah and, in the beginning, Jacob Chetrit. Jacob died in early 2025, and now his son Michael has sort of taken his role in the company. And so a lot of what I've been following has been with the Chetrit Group, with Joseph and Mayor Chetrit. When I started at The Real Deal about a year ago, there was sort of a flurry of lawsuits, and that's how I got involved in covering them. A lot of defaults, lenders looking for cash. It seems like, they had this empire, and the empire is not gone, but it's showing cracks. And additionally, there's been this criminal indictment from Manhattan DA Alvin Bragg alleging that Joseph and Mayor Chetrit harassed rent-regulated tenants in a Chelsea loft building. So they're facing criminal charges for that.
One of the things that's interesting to me here is that, we have all of these defaults happening, but we cover defaults all the time. They can be cured. They're not always a sign that somebody's, empire is falling apart. At the same time, we have these lawsuits, and the lawsuits have revealed a lot of kind of interesting and tricky things about what's going on inside the Chetrit Group empire right now. Tell me a little bit about what you found there and what you find sort of most problematic.
So there's a lot going on and a lot of allegations in these lawsuits. First thing I'll say is that the Chetrits, Joseph and Mayor Chetrit, have been kind of plagued by these recourse guarantees that they signed on these loans. As you said, defaults, they happen, foreclosures, they happen. A personal judgment is a little bit more difficult. So Mayor has been given a court-ordered judgment for $132 million to an affiliate of Maverick Real Estate Partners, and then at least $50 million in judgments to Mac Real Estate. And there's another recourse guarantee case with Mac ongoing right now. So those have sort of followed them. You might be able to say that the Chetrit organization with Judah and now Michael has stayed a little bit further away from these recourse guarantees, and so, hasn't been in as much trouble with that. The other thing that's going on is lenders have made a lot of concerning allegations about mismanagement, about self-dealing. There was this case concerning these 2 office towers on 7th Avenue where Chetrit partnered with Joseph Mornian and Edward Minskoff. And the lender there has basically accused Chetrit of taking tenant security deposits and investing them into other projects or, to pay off other vendors, lawyers, things like that. There's been a back and forth with the receiver about whether to hold Mayor in contempt. That seems like it's not going forward. But the amount of allegations, coming forward as they're sort of suffering with these guarantees doesn't paint a great picture. Now, these could all be false and they could be able to come back on top, but that's what we're watching.
Something else I've found interesting in your reporting is just the characterization of the way that Chetrit Group is run. It seems kind of light on infrastructure, maybe is a nice way of putting it. Tell us about that.
Yeah, I mean, I don't have personal visibility into the Chetrit Group, but the filings that we have do sort of paint a picture of this kind of slightly disorganized, a little more slapdash company. You have a lawyer who was representing the Chetrits in the case with Maverick, who pulled out of the case saying to the court, I can't trust the information that I have from these clients. I keep asking them to comply with these requests and, they won't. You have other filings in the Maverick case where Mayor is saying, I tried to remember all of the transactions and I just forgot a lot of them. And, I don't deal with paperwork and dates and it's very hard for me. And then also in the background, there's sort of these health problems that it seems like Joseph has been having. Considering the size of their real estate holdings, I think it might be a little surprising to people how, back at the napkin, at least in court filings, it appears to be.
Yeah, and I think this is one of the things that people in real estate traditionally have kind of found fascinating about the Chetrits is that they are running this huge property empire without a lot of outside help, without a lot of, the very sort of tight systems of running buildings, of keeping track of deals, like the paperwork that I think burdens a lot of real estate folks, right? But now that seems to be kind of turning against them. I want to talk about this scene that you have in your most recent story. You actually went to a court-ordered auction, I think it was, back in, December?
Mm-hmm.
Tell us a little bit about the scene there. And just to paint the big picture, this is the moment where Mayor Chetrit has this $132 million judgment that he has to start to satisfy. And so they're looking to auction off some of his personal assets in this court-ordered auction so that he can start to give money back to Maverick, the lender. You went to the auction. Tell me about the scene.
I mean, I think if there's one word to describe the sort of scene there, it would be awkward. It might have been awkward because I was there and I don't think anyone really expected me to be there. This was an ostensibly public auction, but these are not heavily advertised. And so, as you said, Mayor's real estate interests had been garnished by Maverick, and then the marshal was auctioning them off. However, there weren't any other bidders really present. So on one side of the table, you have the Chetrits. You have Mayor Chetrit, you have his lawyer, another lawyer, then you have Judah Chetrit, and then you have Michael Chetrit. And then on the side of the table that I was sitting on, you have a lot of the Maverick people. So you have their legal counsel, you have Thomas Hooker, who's representing the plaintiff. And then on the head of the table, you have the city marshal who is running the auction. The city marshal was there with his son, who is also a city marshal, which was a fun fact. But I would say it was a little awkward. They are auctioning off these assets. The Chetrit family has sued in order to try to stop the sale. That seemed to be unsuccessful. For the most part, Maverick is bidding itself and taking the assets for itself, except in, one or two cases, you have Judah and Michael Chetrit bidding on the assets.
One of the things I think is interesting about this scene is, you have Mayor, who's losing assets. You have Maverick, who's trying to take them. You don't have any other bidders except for his brother and his nephew, right? You also have Judah and Michael in the room. It feels to me like this is, other members of the family, their assets moving away from Mayor, but being kept kind of in the Chetrit orbit. Is that a fair characterization?
I mean, it's kind of difficult for us to say the extent to which the brothers are working together. Obviously, they're part of these different organizations. But Maverick has really tried to cast doubt on a lot of other Chetrit family movements, accusing Mayor Chetrit of shielding his assets from the judgment. That hasn't really been successful thus far, but that's been a concern.
Yeah. So Just to tie all of this around in a bow, my big question is, how much trouble is Chetrit Group in? We know that Judah and Michael at Chetrit.org have actually been pretty successful in working out some of their defaults. There have been defaults and issues that Mayor and Joe with Chetrit Group have been able to work out, but there are still a lot of defaults. There are still a lot of ongoing lawsuits. So how bad is it for the group?
I mean, I think if you were to try to defend the Chetrits here, you would say that they still have this empire. Maybe it's not worth it to try to keep a property. As you mentioned, they've done a lot of workouts. They can still hold on here, maybe by changing their strategy. I mean, I think the big thing with the Chetrits is that they had this very aggressive posture, and that worked for a while. But now the world has sort of changed. You have tighter financing, you have inflation, and you also have suited up lenders and professionals that are there to sort of pounce on any vulnerability that you've made. So it's sort of a tricky time for them. I mean, they have these guarantees that seems potentially worrying. We have some visibility into their finances, with Mayor saying in 2022 that he had about $1 billion in real estate interest and cash. Only a small proportion of that at the time was liquid. So, you need to liquidate some of that. They also have this criminal case. We don't know how that's going to turn out. We also have these statements from Mayor where he said that they're dealing with significant financial challenges, an explosion of litigation. You have a Chetrit business associate who's saying, they've been struggling, they don't have any money. What the truth is, actually, it's a little hard to determine. But they're facing a lot of challenges right now. Whether they can overcome those and remain on top is sort of the question that I'm looking at.
We'll be watching. Thanks, Lilah.
Thank you.
Okay, for our last segment today, I really just want to talk about this one real estate story that I'm kind of obsessed with right now.
Lay it on me.
Okay, so you may remember that on March 15th, New York Mayor Zohran Mamdani released this video announcing a pied-à-terre tax.
When I ran for mayor, I said I was going to tax the rich. Well, today, we're taxing the rich. I'm thrilled to announce we've secured a pied-à-terre tax, the first in New York's history. This is an annual fee on luxury properties worth more than $5 million, whose owners do not live full-time in the city. Like for this penthouse, which hedge fund CEO Ken Griffin bought for $238 million.
Right. Okay. I remember this. And he calls out Ken Griffin, right?
He does. And so there are two things that I kind of love about this video in particular. And one is that knocking on the glass sound effect. But the other is the incredibly kind of personal way that he calls out Ken Griffin in this announcement of the pied-à-terre tax, right? We get this upshot of 220 Central Park South, him talking specifically about kind of how crazy it is that, somebody in New York bought a condo that they don't primarily live in for $237 million.
Right. I mean, it was I remember watching it at the time and thinking it was pretty ballsy.
Yeah, it's kind of incredibly audacious because, first of all, this is not a sure deal. This is a proposal for a tax on second homes worth over $5 million in New York City. But he not only makes it sound like it's a sure thing, but also goes and calls out Ken Griffin on this really kind of personal level. And it's interesting because when he puts this video out, it makes it seem like it's a sure thing. And for a minute, it kind of feels like it is. Governor Kathy Hochul comes out and says she's for it too. It's an incredibly viral video. It's a very popular concept with your average New Yorker who doesn't have any concept of Ken Griffin as anything other than, this kind of hypothetical billionaire who has this wealth that's totally inaccessible to them.
Right. And so Ken Griffin has kind of responded, right? I mean, it seems like he took it incredibly personally.
He has. And that's what makes this story even better, right? Because if Mamdani had left it as kind of a hypothetical, then I'm sure you would still have gotten a lot of pushback from the billionaire class, from the business owner class. Obviously, there was always going to be a ton of pushback from the real estate industry. People in real estate really feel like this is going to devalue property worth over $5 million in a way that could be super problematic for the larger market, right? But because he calls out Ken Griffin specifically, Ken Griffin then comes back with this very business guy way of dealing with it. He's not going to post his own viral video, but he says in a letter, or at least he hints that they're really going to reevaluate their plans at 350 Park Avenue. And just as a reminder, at 350 Park, Citadel has a new super tall office building planned, right? And Citadel's representatives say, 350 Park is going to create 6,000 construction jobs in the short term and thousands of white-collar jobs in the future, right?
Okay, but do you think Ken Griffin pulling out of 350 Park, do you think he's bluffing? Is this a bluff, or how real is this? How much could they do this?
Well, so he has another super tall planned in Miami. And he also went and said, this new Miami headquarters, which has been in the works for quite a while and is a very, very real plan that by all means seems to be going forward, but it was supposed to be part office and part hotel. Now he says it's going to be all office, no hotel, which, of course, to real estate in Miami is like music to their ears. More white-collar workers coming to Miami and to people in New York is a little bit threatening. Where are those additional office workers in Miami going to come from? And how does that deplete New York's tax base?
Okay, so seems like maybe they could do it. Obviously, stuff has already started on 350 Park. Maybe difficult to really pull out of that. But, he's making kind of big strides, right? He's meeting with Kathy Hochul. Is that right?
Yeah, I think it doesn't feel totally realistic to me that Citadel could at this point. Of course, they can do anything they really want, but it would be probably challenging to put total brakes on the 350 Park project, right? They have developers involved. They have other investors in the project. But this has gotten Ken Griffin a lot of attention, right? He's now meeting with Governor Kathy Hochul to talk about, one could assume, this issue. I'm sure he has other things to talk to the governor about too, but this has kind of incited this whole incident. And what I think is incredible is just that, Mamdani is amazing at making these viral moments, but they sometimes have these ripple effects that might end up having more backlash against his plans than he had expected.
Great. Well, I'm interested to hear how it turns out.
We certainly will be watching. That's all we have for you this week, folks. On Wednesday, May 6th, Lilah and I will both be at The Real Deal's New York City Forum at the Metropolitan Pavilion. We hope to see many of you there. Please come and talk to us if you see us on site. We'll have plenty of news from that next week.
Thanks for listening.